The market is as expensive as it was during the dot-com boom in 2001. A slight economic slowdown could cause stock prices to drop to 40%. Renowned for predicting the 2008 Lehman Brothers collapse, Robert Kiyosaki foresees another economic downturn in 2024, expecting it to boost his financial standing. This video will look into the reasoning behind his forecast and provide valuable tips for navigating through the 2024 downturn. Before we start, are you stuck with limited ads for growing your business? Check out Workerty.com, the VIP club for affiliate marketers where you can flaunt your products without spending a penny. Yep, you heard it right. Whether you want to sell your vehicle, new products, or old treasures, Workerty is your go-to website. List all your products on the website's free listing directory and see your sales shoot up. Now, looking at the economy. In 2023, investors saw significant success as the stock market delivered substantial gains. This was particularly beneficial for millions of individuals who hold investments indirectly through vehicles like mutual funds, exchange-traded funds, and trusts, often within retirement savings account provided by their workplaces. The U.S. stock market continued its strong performance into 2024, hitting a record high above 5,000 in February, though there were some ups and downs along the way. However, amidst this positive trajectory, Robert Kiyosaki, famous for his book Rich Dad, Poor Dad, raises red flags about a potential market crash in 2024. In a recent tweet, Kiyosaki starkly warned that the S&P 500 is on the verge of a staggering 70% crash, urging investors to brace themselves for what he predicts to be the biggest crash in history. His alert is quite different from how well the S&P 500 did recently. It rose by 24% in 2023 and rose by 5.17% in 2024. But he's not just talking about a stock market crash. He's also warning about a possible weakening of U.S. power. The big question is, will history repeat itself?
Tech is at all-time high. Everybody's happy. They're drinking, partying. But our stock market is about to go down because of all those office buildings, because of COVID.
Wait, you're going to have to pay more on your interest. The interest rates have gone up. We're not going to let you go default. We're going to pretend that everything is okay. When this thing goes down, we're going to see again the banking crisis. The markets are going to crash.
In a February tweet, Kiyosaki is comparing how things are now to how they were in old empires that fell apart. He's saying the U.S. economy might be like ancient Rome before it declined. Kiyosaki is worried about America's future because of things like too much debt and spending too much money. In fact, in February 2024, the government had to shell out $433 billion to manage the debt, about 16% of all the cash they spent that year. And get this, the national debt has increased yearly for the past decade. While economic indicators may suggest a positive outlook, Kiyosaki's insights serve as a sobering reminder of the volatility inherent in financial markets and the necessity of being prepared for unforeseen challenges. Looking at analysts' predictions, Morningstar looked at 700 stocks and found the U.S. stock market was priced fairly on December 21, 2023. This means it wasn't too cheap or expensive, but just right compared to their estimates. Morningstar analysts anticipate a sluggish economic growth trajectory unless the Federal Reserve decides to lower interest rates. BCA Research is even more negative about the U.S. stock market in 2024. They predict a big crash, maybe the worst since 2008, as a recession arrives. They say developed countries could stay in a downturn unless money policies change significantly, which isn't likely unless inflation goes down fast. They think the S&P 500 could drop between 3,300 and 3,700 before improving. Moreover, JP Morgan Research isn't feeling great about the U.S. stock market in 2024. They think earnings will only go up by 2 to 3% next year and set a price target for the S&P 500 at 4,200, believing it might go down. They're worried about high stock prices, interest rates, weaker consumer spending, more political risks, and a possible recession as challenges for stocks. They expect slower growth in the U.S. and worldwide by the end of 2024 due to less support from the government, tighter money rules, and ongoing problems in the supply chain. While some experts are not optimistic about 2024, others are more hopeful. Bank of America, RBC, and Federated Hermes think the S&P 500 could reach 5,000 by the end of the year, up about 5% from now. In light of his predictions, Kiyosaki recommends turning to traditional safe haven assets. One of these assets is gold. Investors often favor gold due to its physical nature, which offers tangible security when held. Unlike the volatility of stocks and shares, gold remains consistently sought after, providing investors with reassurance and tranquility amidst market uncertainties. Many people wanted to buy gold when the stock market crashed in 2007. This made the value of gold go up a lot. Investing in gold is perceived as low risk, as its value is relatively stable and can be easily liquidated for personal or professional purposes. Moreover, gold is a dependable asset for those considering long-term financial planning, yielding consistent returns over extended periods. While gold prices may not experience rapid spikes daily, its enduring value and stability make it a viable choice for securing one's financial future. Kiyosaki has been buying gold since 1972, costing $50 per ounce. He predicted that 2023 gold would go up to $2,100 per ounce. Right now, it's at $2,207 per ounce. Kiyosaki suggests buying gold because he doesn't trust the Fed, and historically, gold has held its value well during tough economic times globally. In just a few years, from 2007 to 2011, the price of gold doubled. This shows that gold is a good investment when times are hard economically.
So let's start with Dana. Why is gold important as money?
We'll all say the same thing. Gold has no counterparty risk. It is the most trusted and oldest form of value transfer that man knows, going all the way back to ancient times.
The best way to start investing in gold is through gold ETFs, which offer a widely favored avenue for beginners. By investing in ETFs specifically focused on gold mining entities, individuals can gain access to gold assets and enhance the variety within their investment holdings. But what if you're a business boss shunning ETFs? Join Workerty. Workerty is an ad-free online platform that can help take your business to new heights at no cost. Workerty is a free website designed to showcase your services to a broader audience, giving your business the exposure it deserves. You can post deals on various products and explore international wholesale vendors offering everything from clothing to electronics, all for free. Whether looking for a job or trying to fill a position, Workerty has got you covered. You can use this platform to post job openings for free and search through countless employment opportunities without additional charges. Workerty provides a free business directory listing service for companies looking to expand their reach. So why wait? Sign up with Workerty today and increase your business visibility with top free classified ads. Another asset is silver. When gold feels unaffordable, consider turning to silver for a more reachable investment prospect. As of March 2024, gold costs over $2,207 per ounce, whereas silver is only about $22 per ounce. Because silver is cheaper, it's easier for investors to slowly build up their investment without needing a lot of money up front. Every year, people find new ways to use silver because of its special properties in areas like biotechnology and electronics. There's a worry that silver might run out in less than 15 years because the demand keeps growing. Because silver is becoming scarce, it's a good investment. In the UK, silver has been performing well, growing by almost 10% each year since 2000, making it one of the best assets. Another benefit of investing in silver is that it is tax advantageous. When buying physical silver in the EU, you usually have to pay VAT. But the Pure Gold Company offers VAT-free storage outside the EU, and you won't have to pay capital gains tax if you buy coins from the Royal Mint. If you are a beginner in investing, purchasing silver bars and coins is a great way to begin. This simple and straightforward option doesn't require any specific expertise, unlike more complex methods such as trading paper silver through futures contracts or buying shares in silver mining companies. And the third asset is Bitcoin. After FTX, the world's biggest cryptocurrency exchange, collapsed in late 2022, the price of Bitcoin fell to around $16,000, way lower than its peak of over $60,000 in 2021. Despite some tough times in the crypto world, including big price drops, Bitcoin hit a new high in March, reaching $70,667.20. This success also lifted other cryptocurrencies like Ether and Dogecoin.
I watched it go from 0 to 60, and I forgot his name, but he's a Max Kaiser. He was screaming and yelling about it. I go, what the hell is this guy quacking about? So it hit 20, then it retraced down to like 0 or something. So it's gone. And then Bitcoin came creeping back. So when it hit 6,000, it had momentum behind it, as a technical trader would say. So I loaded up at 6,000. So I missed quite a bit of it. But I'm still happy. I got about 70 Bitcoin now. But I'd like to get more, obviously.
Mm-hmm.
When the news came that there would be 11 new ways to invest in Bitcoin, crypto fans were thrilled as the coin's price had shot up by 155% in 2023. Lately, things have been looking up for crypto. People started believing that the SEC would approve a new kind of investment called a Bitcoin Exchange Traded Fund, ETF. This would make Bitcoin even more popular. These new investment options make it easier for regular investors to add Bitcoin to their portfolios without hassle. Robert Kiyosaki thinks Bitcoin could hit $300,000 in 2024. If he buys 10 Bitcoins and sells them later for $100,000 each, he could make about $300,000. He also believes investing in Bitcoin is good considering the current economic situation. By positioning these three assets as parachutes for your personal soft landing, he advocates for a proactive approach to financial planning in anticipation of potential market downturns. Financial literacy is vital if you want to be a millionaire quickly. Understanding how money works and how to handle it wisely is like having a secret tool for managing your finances well. It's about learning the basics of money, like budgeting, saving, investing, and managing debt. When you're good at managing your money, you can take control of your financial future and reach your goals. Robert Kiyosaki suggests that the prime opportunity to accumulate wealth isn't when most people assume it to be. Contrary to common belief, wealthier individuals understand that the most significant financial gains occur during market crashes. While it might seem distressing for an investor to see their stock portfolio halve in value during a market downturn, the affluent are uniquely positioned to capitalize on such financial crises. Despite the potential decrease in the value of their current assets, the wealthy possess the liquidity to invest more when prices plummet, securing assets at bargain rates. For instance, if someone holds a $50,000 stock portfolio and the market declines by 50%, their portfolio value shrinks to $25,000. They would need a 100% return from that point onward to break even. In contrast, those with additional capital can seize the opportunity to purchase $50,000 worth of stocks at a 50% discount during a market crash. Consequently, when the markets rebound, their portfolio could be valued at $150,000. By wisely investing $100,000 during the downturn, their investment increased by 50%. In contrast, those who refrained from further investment saw no additional return on their portfolio. Rich people think about money differently from the middle class. They focus on turning things that cost them money into things that make them money. Instead of seeing their house as an asset, they see it as a liability because of the ongoing costs like taxes and upkeep. They prefer to invest in things like rental properties and bonds that pay them money directly. So, by boosting your financial literacy skills, you're giving yourself the best shot at achieving your money goals, facing economic challenges head-on, and securing a bright economic future. With champions like Robert Kiyosaki cheering you on, the road to financial success is clearer than ever for those willing to learn and grow. And for business bosses who want to save their expenses and get supply deals at a bargain, check out the killer offers on workertee.com. Workertee is a trusted platform where you can advertise for free and discover competitive deals on products such as jewelry, shoes, phone accessories, bikes, bags, clothes, computers, DIY materials, and decorations without incurring costs, effectively reaching a broader audience for potential sales growth. Click workertee.com now. Ready to learn and grow? Share, like this video, subscribe to this channel, and watch the next video.